This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, August 6, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is standing alone in the dark. While the broader cryptocurrency market cap sheds 0.26%, the flagship asset has managed a small gain of 0.5%, holding at $64,166. Meanwhile, high beta assets like Avalanche and Stellar are bleeding over 3 and 4% respectively, painting a picture of a market in deep retreat. We are anchored in a regime of extreme fear, with the crypto fear and greed index sitting at a dismal 14 out of 100. The question for this morning's pre-market session is whether this divergence represents a healthy flight to safety or a dangerous accumulation trap ahead of significant volatility. Before we dissect the charts, let's look at the economic calendar shaping our day. We have 3 key data releases pending today that will influence risk appetite across all asset classes. First, initial jobless claims are coming out today. Any deviation from expectations here will dictate whether the labor market narrative remains soft or tightens further, directly impacting how equities, and by extension, crypto, price in future policy moves. Second, we have the productivity and costs report. This is a crucial inflation gauge. If productivity is slowing while costs rise, it reignites stagflation fears, which historically pressures speculative assets like altcoins. Third, wholesale trade data is released today. This measures inventory levels at the retailer level. Strong wholesale trade suggests consumer resilience, but weak data could signal a demand slowdown, reinforcing the need for defensive positioning in portfolios.
What to watch for specifically is the VIX correlation. With the SIBO VIX at 16.5, if these 3 data points suggest a hardening economy, we'll see equities rally and crypto potentially lag. If they suggest slowing growth, crypto might tentatively revive as a hedge, but only if Bitcoin holds its ground.
Turning to the market overview, the data tells a story of stark bifurcation. Bitcoin at $64,166 and Ethereum at $1,893.17 are the only major caps in the top 20 posting green prints today. Everything else is underwater. Total 24-hour trading volume is recorded at $55.52 billion against a total market cap of $2.27 trillion. This liquidity is vanishing from the long tail. We're seeing Bitcoin dominance climb to 56.6%, confirming that capital is rotating out of speculative utility plays and back into the store of value hierarchy. It is a textbook risk-off environment, but the nuances lie in the details. Bitcoin futures demand has fallen to 2024 lows, yet the spot price hasn't crashed. Let's dig into what this means for sentiment, technicals, and flow. 3 headlines are commanding attention right now. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Second, CoinDesk notes that the U.S. Senate housing bill includes a CBDC ban. And third, Cointelegraph highlights that Bitcoin futures demand has fallen to 2024 lows. Pulse, starting with that 700% spike in Iranian outflows. How is that impacting the broader sentiment index? It's adding a geopolitical premium to the fear. The fear and greed index is stuck at 14 out of 100, which is extreme fear. Usually, we see bottoming formations when the 7-day trend stabilizes. Right now, the 7-day trend is at 12, barely moving. This 700% spike proves that external shocks are draining liquidity from emerging markets faster than domestic traders can absorb it. It's not just a technical correction, it's a liquidity squeeze caused by global uncertainty. SPECTER, you own the risk book. Does that 700% spike justify the VIX being at 16.5, or are we underpricing the risk?
The VIX at 16.5 is deceptive. It's hovering near the middle of its 5-day range of 15.51 to 20.88. For equities, that looks calm. For crypto, where we are seeing Avalanche down 3.6% and Stellar down 4.1%, that VIX level suggests we are bracing for a breakout, not a continuation. The 700% outflow is an asymmetric shock. If that capital flees into dollar rather than stable coins, we could see a rapid deleveraging event that pushes the VIX toward that 20 upper bound quickly.
CIPHER, looking at the second headline, the CBDC ban in the Senate housing bill. XRP is down 1.4%. Is the market ignoring a structural tailwind?
Short-term traders are definitely ignoring the long-term utility here. The headline says U.S. Senate housing bill includes CBDC ban, which is structurally bullish for permissionless chains like XRP, but we're seeing XRP at $1.04 with a 1.4% change. Why? Because in a risk-off regime, liquidity evaporates first. Traders aren't buying the legislative win, they're selling the beta. However, notice that link is also down only 0.2% at $8.11. The market is segregating the pure play from the general altcoin basket. The ban doesn't stop the bleed today, but it isolates XRP from the broader tech sector contagion.
Finally, the third headline, Bitcoin futures demand falling to 2024 lows. Grid, how do you interpret this technically? Is this base building or a trap?
It's neither yet because the price action is contradictory. Bitcoin is up 0.5% at $64,166 while derivatives demand collapses. Normally, price follows open interest. If open interest is falling and price is rising, that's short covering or spot buying absorbing sell walls. I'm watching the 24-hour low of $64,276. If we hold above that, it confirms a support floor. But if futures demand stays at 2024 lows, we don't have the fuel for a breakout. We're seeing a dead cat bounce structure unless Ethereum, which is up 1.6% to $1,893.17, can lead a charge higher.
Let's break down the asset-specific mechanics, starting with Bitcoin. Bitcoin is at $64,166, up 0.5%. Pulse, what does the crowd feel about this specific level? Retail is paralyzed. The Fear and Greed Index at 14/100 indicates that most participants are either capitulating or sitting on hands. There is no euphoria, but there is also no panic buying. This is a wait-and-see hold. The 700% outflow from Iran suggests that cross-border retail investors are pulling money out entirely, not just swapping pairs. So this $64,166 level is being held by stubborn holders, not new buyers. Grid, technically, is $64,166 a support or a ceiling?
It's a temporary shelf. Look at the 24-hour range. Low $64,276, high $64,933. The current price is below the average, sitting at $64,166. The fact that it hasn't broken the 24-hour low yet suggests a bid wall. However, the volume profile is thin, without the futures demand we saw in 2024. This support is fragile. If Bitcoin drops below $64,276, we lose the intraday swing low. I'm marking $64,166 as a pivot, not a foundation.
CIPHER, where is the actual money going if not into futures?
Into cold storage and Ethereum, we're seeing a divergence. Bitcoin futures demand is at 2024 lows, yet Bitcoin is green. Meanwhile, Ethereum is up 1.6% to $1,893.17. On-chain data shows net outflows from exchanges for Bitcoin, but a stronger relative velocity in Ethereum. Smart money is using Ethereum as a tactical hedge. They aren't leveraging up on Bitcoin. They are quietly rotating spot Bitcoin profits into Ethereum to capture higher beta if the risk-on switch flips. Also, note Core Scientific turning lower after disappointing Q4 results. Mining equities are weakening, which usually drags Bitcoin, but Bitcoin is resisting. That implies spot holders are absorbing the miner distress, not exacerbating it.
SPECTER, is that quiet rotation a risk?
Only if the VIX spikes. At 16.5, it's manageable. But remember, Bitcoin dominance is at 56.6%. That is extremely high. Historically, when dominance hits these levels during a fear cycle, it eventually snaps back if the macro environment improves. But right now, the 700% Iranian outflow is a massive drain on global liquidity. If that capital doesn't return to crypto, Ethereum's outperformance is unsustainable. The risk is that Ethereum leads the Bitcoin pair higher, only to get dragged down when the broader liquidity crunch hits harder.
Moving to Ethereum. Ethereum is at $1,893.17, gaining 1.6%. This is the strongest major cap performance. Grid, what does the chart say about Ethereum leading Bitcoin?
Ethereum is showing relative strength. While Bitcoin is consolidating in a tight band around $64,000, Ethereum is pushing toward $1,923.80, its 24-hour high. The ratio of Ethereum/Bitcoin is strengthening. Technically, this means the altcoin season thesis is dead for now, but an Ethereum rotation thesis is alive. If Ethereum breaks and holds above $1,923.80, it validates the leadership. If it rejects there, we see a failed breakout. Currently, the momentum is pointing up, but it needs volume confirmation to avoid a fake out.
CIPHER, why is Ethereum outperforming Bitcoin right now?
Two factors. One, the TD Securities report cited earlier mentions NYSE tokenization as an institutional turning point. Ethereum is the primary settlement layer for many of these tokenized assets. Two, the Bitfinex revival of tokenized bonds targets crypto-native yield seekers. These yield seekers prefer Ethereum for staking and collateral efficiency over Bitcoin in deflationary environments. So, the flow is into yield-generating utility, which is Ethereum, not just pure store-of-value Bitcoin.
Pulse, does the market sentiment reflect this Ethereum preference? Not yet. The overall sentiment is still 14 over 100 extreme fear. The fact that Ethereum is up 1.6%, while the total market is down 0.26% is a micro-rebellion. Retail hasn't joined in yet. They are still scared. Until the fear and greed index climbs above 25, this Ethereum strength is likely institutional or sophisticated trader positioning, not a broad retail mania. It's a whisper, not a shout. Now, let's look at the laggards. Avalanche is down 3.6% at $6.40. Solana is down 0.8% at $72.88. SPECTER, what's the risk here?
Avalanche at $6.40 is dangerously close to its 24-hour low of $6.39. A break there triggers algorithmic selling. Solana at $72.88 is holding up better, but it's still in the red. The risk with high beta L1s like Avalanche and Solana is leverage liquidation. In a low-volume environment like we have with $55.52 billion total turnover, a small spike in sell volume causes disproportionate price drops. The 700% Iranian outflow affects emerging market hubs, and Avalanche/Solana often attract that demographic speculative flows. If those flows dry up, the price crashes.
Grid, is there a technical floor for Avalanche?
Support is at $6.39, essentially today's low. If we break that, the next visible structure is much lower. The chart is showing a descending wedge, but it's breaking downward. No buy signals here. For Solana at $72.88, the 24-hour low is $73.08. Wait, checking data. Solana 24H low is $73.08. No. The table says $73.08 is the low, but price is $72.88, so it is below the daily low. It is testing fresh lows. Technicals are weak, no reversal pattern yet.
CIPHER, is capital leaving these chains permanently?
No, but it's pausing. We see Monad's CB-BTC bridge potentially adding $5 billion in Bitcoin-backed liquidity. That narrative benefits the whole ecosystem, but immediate flows are cautious. Money is moving from high-compute smart contract platforms like Avalanche into simpler, more secure layers, Ethereum or pure store-of-value Bitcoin. It's a quality upgrade, not a mass exodus. Once the fear and greed index recovers, capital will rotate back to Avalanche, but not while the index is at 14.
Let's discuss Ripple XRP. It's at $1.04, down 1.4%. The CBDC ban headline is positive, but the price is negative. CIPHER, explain this disconnect.
It's a sell the rumor, buy the news inversion, or rather, ignore the news due to fear. The CBDC ban is a long-term structural hedge for XRP, but right now, liquidity is scarce. Market makers are widening spreads. The 1.4% move is largely due to low float availability, not genuine selling pressure from long-term holders. Compare this to Link at $8.11, which is down only 0.2%. Link has more consistent flow activity. XRP is currently a ghost town in terms of daily volume relative to its cap. It's dormant, not dying.
Pulse, does XRP's weakness hurt the sentiment score? Yes, XRP has a loyal community. When XRP bleeds while the Senate passes favorable legislation, it signals to retail that even good news won't save your bag. That erodes confidence. It contributes to that 14/100 fear score. If XRP stabilizes, the sentiment index might lift off the floor. But right now, it's a weight dragging on the altcoin narrative. Finally, Cardano. It's down 2.1% at $0.19. And Litecoin, LTC, is up 1.1% at $45.11. Why is LTC green when Cardano is red?
Litecoin is old guard. It's treated almost like silver to gold. In risk-off modes, LTC often holds value better than newer L1s. Cardano is tied to development cycles and speculative utility. LTC is tied to transactional volume and legacy status. Technically, LTC at $45.11 is holding its 24-hour low of $44.76. It's consolidating. Cardano at $0.19 is well below its 24-hour high of $0.19. The chart for Cardano is weaker. Cardano is failing to hold the $0.19 psychological level.
CIPHER, LTC's performance. Is it a sign of nostalgia?
It's a sign of reduced complexity risk. LTC requires less computation, fewer dependencies, and less hype. In a fear-driven environment, complex protocols like Cardano carry higher failure risks in the eyes of cautious capital. LTC is simple. Simple equals safe. Plus, note the PayPay IPO news. PayPay is linked to Binance, but broader institutional adoption stories often benefit older, regulated-friendly assets first. LTC's stability might be a precursor to institutional interest in boring crypto.
SPECTER, is LTC a trap?
No, but it's a defensive play. Don't chase LTC for gains, hold it for preservation. The risk with Cardano is that it could slip to $0.18 if the fear and greed index dips further. The asymmetry is bad for Cardano. For LTC, the downside is limited by its established user base. Stick to LTC if you want altcoin exposure, but avoid Cardano until the 7-day trend improves.
Apex, tie this all together. Bitcoin is holding, Ethereum is leading, alts are bleeding. What is the strategic posture?
The strategy is clear: defense first. Grid highlighted that Bitcoin's $64,166 level is a fragile shelf, and CIPHER confirmed that futures demand is at 2024 lows. Pulse reinforced that the crowd is paralyzed at 14/100 fear. Together, this tells us that any rally is likely to be shallow and sold into. However, SPECTER warned about the VIX proximity to 20, and Grid noted Ethereum's relative strength. The opportunity lies in Ethereum/Bitcoin dominance, if you must be in crypto.
That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.